And if you buy 1% of the dollars in the world, you'll have, 0.1% of what you had 100 years from now. So Bitcoin is a conservative monetary network. In fact, there's no heat lapse, there's no leakage, there's no inflation. So if you're looking for something that you can hold for a long period of time, it's kind of like a freezer for your money.
Hey guys, welcome back to Everyday Finance. In this video, Michael Saylor discusses about Bitcoin. Michael Saylor says, generally speaking, the risk involved in having capital in one of these nations is either the bank will simply pilfer it, or the currency will collapse, or an assortment of legal, financial regulations whereby the state puts it on hold. After the bank converts it, the value of the currencies declines. It gets somewhat more frozen. There's a capital control, and you basically lose all of your money. Hence, Bitcoin stands for, it's a new technology, I guess. There are a few advantages to this revolutionary technology. The first of which is that it's the first digital currency network in global history, with a limit of 21 million Bitcoin, meaning that if you possessed all of the world's wealth, purchased all of the Bitcoin, and after 100 years, you will still possess 21 million Bitcoin, correct? There won't be any more Bitcoin coming. That's a bit dramatic, as obviously nobody will have any. All the money in the world, but a more accurate illustration would be that if you purchase 1% of Bitcoin now, you will still own 1% of it in 100 years. If you purchase 1% of the gold, you will own 1/10 of that, or 0.12 of the total. Objective, and if you purchase 1% of the global currency, you'll be aware of it. 0.1 of what you have in 100 years, hence Bitcoin is a prudent investment financial network. There isn't really a heat wave. There isn't any leakage, inflation, so it's similar to a freezer for your belongings if you're searching for anything you can keep for a long time. Correct money. If money could buy food, and that food was going bad over several days, you would want a refrigerator to store it in. The refrigerator doesn't completely spoil thus. Bitcoin functions as a means of freezing your economic. The first major concept is to store energy so that it doesn't evaporate, while the concept behind Bitcoin is that it functions as a virtual bank, similar to a banknote, move network, and the money is. And lots of things Michael Saylor discussed, so please watch the video to end. And like, share, subscribe our channel Everyday Finance. Thanks.
If you have capital in one of these countries, generally the risk is the bank will just steal it, or the currency will collapse, or some combination of some legal financial policies whereby the government freezes it, the bank converts it, then the currency's devalued, then it's frozen a bit more, then there's a capital control, and you end up just losing all your money. So Bitcoin represents, a new technology. I mean, a breakthrough technology, and there's a couple of benefits to it. The first benefit is it's the first digital monetary network in the history of the world. So it's capped at 21 million Bitcoin. So that means if you owned all the money in the world, you bought all the Bitcoin, you had 21 million Bitcoin, 100 years from now, you still have 21 million Bitcoin, right? I mean, there's no more Bitcoin coming. Yeah. Now, I mean, that's kind of hyperbolic because obviously no one's going to have all the money in the world. But I mean, a better example is if you buy 1% of the Bitcoin in 100 years, you'll still have 1% of the Bitcoin. Yeah. If you buy 1% of the gold in 100 years, you'll have 1/10 of that. You'll have 0.12% of the gold. And if you buy 1% of the dollars in the world, you'll have, 0.1% of what you had 100 years from now. So Bitcoin is a conservative monetary network. In fact, there's no heat lapse, there's no leakage, there's no inflation. So if you're looking for something that you can hold for a long period of time, it's kind of like a freezer for your money, right? If money was food and it was spoiling over the course of days, you want a refrigerator, you put the food in the refrigerator, it doesn't spoil, right? So Bitcoin is like that. It's a way to freeze your economic energy so that it doesn't dissipate. And that's the first big idea. But the second idea is Bitcoin's a bank in cyberspace. So it's kind of a bank, a money transfer network, and it's the money. So it's all three of those things. So this is not as important to Americans that have a bank they trust. But if you live in Africa and the bank is run by the cousin of the guy that just took over the country last week, then if you put your money in that bank, they're probably just going to take it. And if you want to convert your money from that local currency to another currency, they probably take half. Oftentimes, the capital controls are such that the country will fix the exchange rate at half of the real value. So every time you change money, you give half of it to the bank and you get the other half. And it's not a terribly fair thing for the proletariat. But what Bitcoin allows you to do is, if I wanted to buy your car and you were in Africa, I could pay you for your car in Bitcoin, and then you would get the fair exchange rate for the Bitcoin. Then you could hold the Bitcoin either on your own hardware device, you could be your own bank, or you could deposit the Bitcoin with a custodian somewhere outside of your country. Because Bitcoin is a global network, so everybody in the world, anybody can be a custodian of Bitcoin. So there's competition. So you would have an asset which is pure property, which is not being debased by capital. It's not being debased by manufacturing or devalued by manufacturing, and it's not being devalued by monetary inflation. Right. And you would not have to rely upon the local banking system, the local government, or the local currency. All three of those are weak links. And if you look at wealthy people, most people that are wealthy in the world are wealthy because they converted their currency, whatever they earned, they converted it into property. Like they bought, what does the royal family of the UK have? They own the middle of London. What does the Emperor of Japan have? They own the middle of Tokyo, right? If you own a block in New York City or Paris, then when would you ever want to sell that? You probably never want to sell it. You want to keep it forever. Yeah. And if you want to stay wealthy, you buy that land and you hold it because it appreciates in value at the rate that the money collapses. But if you want to get wealthy, then you go leverage long. So like if I can borrow a bunch of money, if I can borrow $10 million and buy $10 million worth of scarce desirable property, then every year it goes up in value 7%. And after 10 years, it's doubled in value. So now my $10 million acquisition is worth $20 million and I've got $10 million in equity. So then I refinance the property and I take out $5 million in equity and I live off of that without paying tax on it. And the next 10 years, the $20 million property is worth $40 million. And then after 10 more years, the 40 million is worth 80 million. So you see how your family starts to become very wealthy because your grandfather bought 10 blocks in the middle of New York or in the middle of Paris or some city. Of course, it has to be scarce desirable, right? People have to want to live there. Yeah. And so the risk is if you bought those 10 blocks in the middle of Kansas, maybe it doesn't appreciate at the same rate. Generally, this strategy works well when you're buying land in the middle of Tokyo, London, Paris, or New York, right? We all know stories of wealthy people that bought that land. But you could think about Bitcoin as cyber Manhattan. Imagine I created a city in cyberspace that had only 21 million blocks, and one day 8 billion people will want to live there. And they're never going to make more than 21 million blocks. And all 8 billion people can move in. And there's no mayor to put a zoning restriction on it or pass a city tax. And there's no governor to put a state tax on it. And there's no president or Congress to put a national property tax on it. And when the place where you live decides to tax it, you can fly on an airplane, to Singapore or Monaco or some other place that will give you, or you can move from one state. Maybe you move from a high tax state to a low tax state, and then you keep your property. So Bitcoin represents digital property, and it represents a property right to 8 billion people that is being driven by the adoption of the billions of people. I mean, everybody in the world wants property rights. I mean, it's been the driving theme of human history for thousands and thousands of years. That's why people came to America. That's why they went west. That's why they went anywhere. So that's a very deep-seated theme in humanity. But the second thing is everybody wants money, and you either want it if you don't have it, or you want to keep it. Right. And there's a whole set of dynamics of people that are actually passing laws to basically deprive you of your money. If you own assets that generate rents, that's a currency derivative. The rents are going to be devalued. If you own bonds, that's a currency derivative. They're going to be devalued. And every single fiat currency in the world is built to be devalued. The only question is, will it be devalued at 7% a year versus desirable assets? Or will it be devalued at 14% a year? Or will it be devalued at 40% a year? But it is 100% certain that the currencies will be devalued. The bonds are going to have a negative real yield. They'll be devalued. Value stocks and commercial real estate that's valued partially on the cash flows will be devalued. So Bitcoin kind of represents more like that trophy asset, like the one of a kind trophy piece of art, or the one in a kind franchise, or the one in a kind beachfront property. Everybody wants. It's not valued based on cash flows. It's valued based upon its scarcity and desirability. Now, we have lots of examples of people that buy Ferraris as a store of value, or Rolex as a store of value, or commercial art, or art as a store of value. But the ideal money is something liquid and fungible. And Bitcoin is liquid and fungible. So it's like that high quality, desirable real estate, but it's like buying a pure city block in the most desirable city on earth. And it's got a global brand, because it's not, Tokyo's only interesting if you speak Japanese, and Paris is maybe interesting if you speak French. But, Bitcoin is neutral in cyberspace. The Chinese like it, the Russians like it, the Americans like it, the Europeans like it, the Africans like it, the South Americans like it. Why wouldn't you like it, right? It passes this last Bernard Arnault test, which is, you ought to buy something that someone richer than you and more sophisticated than you will want to buy from you.